Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back after a long holiday and hope you all had a great Holi. Well, the hope is to see some green color because the GIFT Nifty is pointing out to a good start for the Indian markets. However, the pre-open rates are pointing out otherwise. We can see that the Nifty in the pre-open rates is showing a slide of about 100 points at this point of time. So yes, the hope was to see a green color, but right now the pre-open rates are pointing to the contrary. But Friday was a good session for the Wall Street. We saw the Dow Jones popped over 600 points and the S&P 500 and the Nasdaq index also rose over 2% each. And today the spillover, it was visible in the Asia Pacific markets also because that was sailing in green. It also comes on a strong support that came from the Chinese equities, given that the government has announced that they plan to revive consumption, real estate market and other measures too. So yes, plenty of cues to start the trade with. We will be taking some stocks in focus, and to understand how you should be placed in a market like this, we will be having our market experts joining us as usual too. So keep dropping your stock related queries on our live feed and we will be taking them up shortly. But before we delve in deeper to the show, let's take a quick look at the top headlines this hour. Stocks on Wall Street end higher on Friday amid relief rally as investors get reprieve from tariff-related headlines. The Dow Jones pops more than 600 points but still reports the worst week since 2023. The S&P 500 and the Nasdaq both climb over 2% each. Stocks in the Asia Pacific also open higher after China outlines plans to boost consumption. The GIFT Nifty is indicating a good start for our own markets. Brent crude trades at 1% higher, around $71 per barrel, after US vowed to keep attack Yemen's Houthis until the Iran-aligned group ends its assault on shipping. Gold prices surge above $3,000 for the first time as investors seek safe haven buying from Trump's tariff orders. And addressing speculating around the IndusInd Bank, the Reserve Bank of India has issued a statement saying that the bank remains well capitalized and financially stable. The RBI also added that there is no need for depositors to react to speculative reports. So yes, if we see the last session, Nifty did end below that 22,400 mark. It broke the 22,450 mark, a level which it has defended for the past 5 sessions. In the last week, we also saw that the Nifty slipped nearly 1% and 35 out of 50 stocks have closed in the red. However, Bank Nifty, that managed to stay above that 48,000, which is a good news given that the sharp drop that we saw in IndusInd Bank too. Bank Nifty did close flat in the green in the last session as well. Now this week what we need to track is the US Federal Reserve's interest rate decision, which is due on Wednesday, and the markets largely expect the Fed to keep interest rates unchanged again this time. Apart from that, we will also be tracking the FI activity because they have been net sellers for a really long time, and tariff uncertainties. Note that the US president did come out over the weekend threatening 200% tariff on alcohol from EU countries, and even the White House had earlier criticized India's tariff on American alcohol and agricultural products. So we'll watch out how this discourse unfolds, what it means for reciprocal tariffs also that will be coming out from April onwards, and how should India navigate this particular scenario. Meanwhile, in the primary markets, there is an IPO which is set to launch from March 20. That is your Aris Infra IPO, which is set to launch from March 20 to 25. However, the price band is yet to be announced at this point of time. Coming to what will set the trade or tone of the trade today, first up on your screen is your option cues data. Well, the Nifty put call ratio has risen to about 1.02 levels from 0.96 levels in the previous session. So yes, there is some kind of optimism which we are hoping in the markets to prevail in the trade today. Second is your F&O ban list. No stocks have been added, but the stocks that have been retained include the likes of your BSC, IndusInd Bank, given that we have seen a sharp 28% drop last week too, Hindustan Copper, Manappuram Finance and SAIL. No stocks have been, however, removed from the F&O ban list. Coming to the fund flows data, well, FIs continue to be net sellers. They have sold stocks which is worth about 792 crore rupees in the cash markets. On the other hand, if we look at the DIIs, they have bought and they have helped out, and once again a helping hand, and they have bought stocks which is worth about 1700 crore rupees in the cash markets. Now, let's take a look at the pre-open rates at this point of time, because at the start we were seeing quite a deep cut, but right now it is seeing a little bit of a reprieve, and right now the Nifty is down about 44 points. But to navigate what your trading strategy should be and to answer your stock related queries, let's get on board with our technical expert of the show. We have with us market expert Kunal Rambhia. Kunal, good morning.
Morning, Lovisha. Thank you so much for having me on the show.
Kunal, let me start. Once again, last week Nifty underwent consolidation, but it did not breach that 22,300 levels. How do you expect this week to pan out?
So just to understand this, Lovisha, I'll just take a minute and take the viewers through the entire formation of last 4 years. So if we look at the trend, the overall trend is divided in three parts. The first is a long-term trend, second is mid-term, and the third is short-term. So long-term trend over the last 4 years still remains absolutely intact on the indices. That's positive. The mid-term trend, which we are witnessing since last 3 to 4 months, is certainly negative, where the Nifty is making lower top, lower bottom. But last 1 month is been the sideways consolidation, and we are consolidating near January and February 2024 data. Right, so that's near to 22,400, 500 levels. Now, this consolidation breakout is placed at 22,700. So, by any chance, in the coming days, if we see Nifty going above 22,700, I think this sideways consolidation will give us the first trigger. Long-term trend being positive, short-term trend turning to positive, that can be the good level to initiate trades on the long side. But so far, I think the stock-specific movements are likely to continue.
That closed above 48,000. So there was some bullish sentiment intact in an otherwise weak market, and despite the IndusInd Bank's sharp knock that we saw. But any levels that you're watching out for this week for the Bank Nifty index?
Absolutely. Again, sideways consolidating behavior of Bank Nifty is also seen, and fragile behavior of IndusInd Bank, to be honest. But at the same time, the breakout of the Bank Nifty is placed at 48,900. Now, this indices, which are in sideways consolidation, it's a good time for option traders, or those option sellers, I would say, to create the strategies based on the range. But unless the Bank Nifty gives a breakout above 48,900, one should not really go, the directional on the indices, wait for the breakout to come in and then trade accordingly.
Okay. All right. The next is your Nifty IT index, Kunal, because that was the lead sectoral underperformer last week, 4% cut that we saw. And now that the Trump's tariff uncertainty is prevailing, how do you expect investors to approach the IT space?
IT was laggard. If we just go back and check out the last 3 years' behavior, IT was laggard somewhere between May 2022 to almost November 2023. Then we saw a big uptake and the index made a new high. And again, it's down from those 45,000 levels to almost 35,000 levels. Certainly, if you look at the short-term behavior, it's negative. But in a broader uptrend, such kind of corrections are absolutely normal. I'm very, very comfortable buying IT stocks from these levels, considering there is no further fall. So if the IT index remains above 33,000 mark, right now it's trading at 35,800. So it's a position review which I'm sharing. If the index remains above 33,000 mark, I think more or less this can be a good buying opportunity, provided the horizon is long term. But if someone is looking at the short term, then wait for the consolidation to be over. The best performing counters in this entire pack, I feel, will be Infosys and Wipro to watch out for.
Okay, Infosys and Wipro that we need to watch out. But one stock in focus, and one stock which has been making headlines, that is your IndusInd Bank. We saw that last week it saw a sharp 28% cut due to reports of accounting discrepancies in its derivative segment. However, the RBI has come out reassuring depositors that the lender's financial health remains stable. Kunal, what do you believe on the stock? Do you expect this news to instill some confidence in the coming days, or how do you view the stock?
So again, Lovisha, we always discuss on our show that market generally discounts everything. Let's just go back and check out the entire chart of IndusInd Bank from 2001 so far. It's been 25 years. the trend is absolutely intact. I'm not denying the fact that this correction was brutal. Yes, from 1800, the counter has come down to as low as 650 kind of levels. That was severe. But if you look at the overall trend, I'll right away share the chart on our handle also on the Twitter. Just have a look at it. It's right bounce from the support level itself. So unless IndusInd Bank closes below 575 ballpark figure, I will remain bullish on this. And this correction can be considered as a buying opportunity. If the counter goes below 575, the view might change. But otherwise, it's a good level to think of accumulating.
All right. Good time to accumulate IndusInd Bank for this right now. But the first trades coming on your screen, well, we have opened in the green, 22,450 mark. That's what we have opened at. 2/10 of 0.2% gain that is coming in for the Nifty 50 index at this point of time. So good gain that we are seeing. Given the last 1 week, we saw a 1% cut on the index also. Let's take a look at Sensex. Well, Sensex is also doing well, up about 150 points right now. If we take the pre-open, the updated rates, well, 200 points gain that is coming in for the Sensex too. Let's take a look at some of the sectoral indices at this point of time. Nifty IT index once again seeing a bit of a cut, which is your nearly 0.5% cut coming in for the Nifty IT index. However, what is doing well, that is your Nifty Auto Index, 0.4% gain that is coming in for the auto indices. Pharma Index also doing well, 0.2% gain. Nifty Metal Index holding well with more than 0.5% gain coming in for the metal indices. Nifty Realty Index at this point unchanged. If you look at FMCG also, very flat in the trade at this point of time. So slowly we can see some recovery, but we are just hoping for that. Let's take a look at some of the mid cap and small cap indices. Both of them eking very slim gains at this point of time, flat in the green at this point of time. So yes, mid cap and small cap indices holding well for the markets and supporting in the recovery in the markets. But let's see some of the top gainers on the Nifty 50. That includes the likes of Bajaj Finserv, more than 1.5% gains coming in for the Bajaj Finserv. Tata Motors, after receiving an upgrade from HSBC to an buy, the stock is seeing good, and the company also plans to fundraise about 2,000 crore rupees. So a good move coming in for Tata Motors stock, 1.5% gain coming in. Hindalco, SBI Life, L&T, Coal India, all of these stocks are doing well in the trade. However, what is not doing well, that is your HCL Tech, Kotak Mahindra, Hero MotoCorp and Britannia. All of them seeing a cut of nearly 0.5% at this point of time. So yes, one stock which is in focus, that is your Tata Motors. Yes, one of the top Nifty gainers as well. The company has also said that it plans to raise up to 2,000 crore rupees via NCD issue. And today morning also HSBC did upgrade the counter to a buy and shared a target price of about 840 rupees. Now they believe that the valuation derating in the past 2 to 3 quarters has been reasonable, and they expect that the new launches in the domestic PV market is expected to help the Tata Motors gear market share. Kunal, we have seen Tata Motors back-to-back underperformance, but do you expect some meaningful recovery to take place in the next few months? Do you expect the fundraise to instill some confidence?
So again, Lovisha, this counter was actually the darling of the market between 2023-24, where the counter went up from almost 400 levels to 1100 levels. Now there was a severe mean diversion which actually happened, and now the counter is back to the same level itself. And if you look at the overall trend of last 4 years, it's absolutely intact. And 44% discount from the higher levels. I'm not saying that because the counter is lower, we should be buying. But if the trend is intact, we should definitely be shortlisting the counter. So we have also shortlisted this counter. We are just waiting for the trigger of 675, 680 zone. If the counter decisively reclaims that level, I think the trend will be intact and one can initiate the buy after that level. And certainly, these kind of initiatives which are taken by the management will always be when the counter is attractively available in the market and just to reinforce the confidence in the business. So yes, I think this will trigger very positive for the company. But unless and until the counter goes above 675, 680, I'll stay away. But after that, definitely it's a buy.
Definitely, it's a buy. Well, let's move on to another counter, that is your Shilpa Medicare, because the stock has been doing well. The company did say that its wholly owned subsidiary Shilpa Pharma Life Sciences has successfully cleared US FDA inspection at its Unit 2 facility in Raichur with about 0 observations. Now, this marks the second consecutive clean inspection at the site. Kunal, given that the stock has seen tremendous rise till October last year, from 800 levels. It is now at 600. What can we expect in the near term? Can we expect a good rise too in the coming days?
Lovisha, this counter in last 10 years has not done actually much. August 2015 counter was near to 600, 620 itself, though it is highly volatile where the counter has gone down till 220 and on the upper side we have seen the levels of 950,000 also. But in last 5, 10 years, this counter has more or less remained near the 600 mark itself. So I will not really be keen to trade this, but if someone is willing to take a trade, I think it should be above 685 to 700 levels. Above that, one can trade for the short term with a target of 840, 850 levels. But overall trend on this counter is sideways, so I would avoid this.
Okay, you'll avoid this counter. But let's take some viewer queries at this point of time. The first query coming in from Mukund Yadav. He's asking the views on AB Capital. AB Capital, how does the stock look like on the charts, Kunal? Because as I can see that the stock is, is trading nearly at its lowest point, 162 odd levels, fizzled out gains from 200 odd levels that was there in September.
Correct. So again, somewhere in April 23, the counter made bottom near 150. December 23, again the same bottom, and recently it came down till 150 and it's bouncing. It's trying to bounce from that level. Sideways consolidation of last 1 month. So the trigger is placed at around 170 levels. If the counter goes above 170, then this midterm trend, which we have seen negative from 240 levels to 150, might just come to an end and we might see a fresh buying happening on this. I will not be catching the falling knife as I mentioned about the other counters also. We'll wait for the trigger to come in because the sentiments are very negative, right? So we'll just wait for the trigger above 170. Probably at that time, I would request our viewer to visit Money Control again and ask someone who is available. I think with the stop loss of 160 at that time, one can initiate with the target of 200 levels.
Okay, 200 levels that we can eye out for AB Capital. Well, the next query coming in is from, that is your Debu K. He's asking the views on RBL Bank for a fresh investment. Well, past 3 months, it has seen a significant, underperformance, Kunal. Q3 also was not very impressive. It was very disappointing given the rise in provisions. How do you expect the near term to pan out? Will it be a viable for a fresh investment?
Certainly, no, Lovisha. The short term has to be with the momentum. If it's a long term, then I would say, yeah, it's near to the support and consolidating near 150 levels. That can be good to initiate buy. But for short term, one should always chase the momentum. This counter has no momentum as of now. So from short term point of view, it's a clear no. In the midterm, if the counter goes above 170, I think that time this can make sense to initiate buy. And from long term point of view, I think if the counter remains above 150, it's a buy. But for short term, it's a clear avoid.
For short term, it's a clear avoid for RBL Bank. But let's take another look. That is another query. That is your Arun Srinivas is asking on Hero MotoCorp because he plans to start investing in the stock for a long term, and he's asking whether it is a good time to start accumulating. Please suggest. Hero MotoCorp significant correction past 6 months, Kunal. But the February sales data was quite disappointing. We saw the sales figures fall about 20%. What do you expect for a fresh investment on a long term basis?
So again, purely on the basis of data, this counter is down by around 44% from the highs, and we saw the highs of 6,250. Right now, it's available at 3,500 kind of levels, right? And if the viewer has a long-term view and then he is willing to stay invested for long-term, I think this is a good level to start accumulating in phases. Now, what one can do is create an SIP for this kind of counters. Start accumulating from this level, and every decline of 150 to 200 points, you should be adding the similar amount. You should be deploying the similar amount in the same counter. I think the strong support on the chart is 3,500. If that's broken, then 2,800 is the next support. So in between this phase, one can definitely buy. But remember, because the trend is clearly negative, it might take time. It goes into consolidation and then it might enter the uptrend. So one needs to have long-term approach and patience to add such counters and stay invested. But otherwise, it's a good counter to buy at this level.
A good counter to buy at this level for Hero MotoCorp. Then hope that answers your query, Arun. Let's move on to another viewer. That is your Shweta Naidu. She's asking, she's holding Zen Technologies with about 30% loss. She's asking whether it is a good time to average now or exit. This year itself, so far, Kunal, the stock is nearly halved. What do you expect the near-term holds? Should she average at this point of time or exit?
Average is a clear no. The weekly chart is still positive. If you look at last 4 years data, the counter actually rallied from very low levels of around 15 to 20 to as high as 20 to 50. Now, this kind of rally will always have such kind of severe reactions during the negative market. The trend on the lower overall chart is absolutely intact because of lower base of 4 years, right? So the trend is positive, but short term, again, the trend is sideways to negative. So I would say let's not average out, but because you were stuck at the higher levels, stay invested for now. If the counter manages to go about 1350, I think this short-term trend might also turn positive if the momentum really picks up well. Think of averaging so that you can make something good in the short term also. But otherwise, stay invested for now. Support is at 900. Keep that level in mind.
Okay, all right. Let's move on to another view query. That is, Shweta Naidu is asking that she's bought Dixon Tech at 15,200 levels at 13% loss. However, she's seeing right now whether or not she should average or wait or exit at this point of time. How do you expect? How are you placed on the stock, Kunal? Because it has a good guidance which is coming over, 40% guidance that is coming over. So, what do you expect the near-term holds for the stock?
So this was the counter, honestly, which we exited on 8th of January 2025, where the daily loss was around 8%. So that was the 16,800 level was the exit point. We have recently shortlisted this counter. Now, the logic behind that is September, October, and November 2024, the counter was holding on to the levels of 13,400. In fact, in today's trade, again, it has reclaimed 13,400. So we have shortlisted. Now, when do we initiate the buy? So as I always mention, it's sideways consolidation entering into the positive trend should be the reason for us to buy. So keep level of 14,000 in mind. If the counter goes above 14,000, I think you can think of averaging, but maintain the strict stop loss of 13,000 levels. That should be the stop loss and initiate a buy above 14,000, and the targets can be 15,500 to 16,000 kind of levels. So keep these levels in mind and strategize accordingly. Overall trend is absolutely positive. And so long term is intact. The positive approach can be adopted, but for short term, these are the levels to watch out for.
Okay, all right. That's the viewer answer coming in for Dixon Tech. Let's move on to another viewer query. That is your Mukund Yadav. He's asking the views on RailTel. Kunal, how does this stock look like? 40% correction that we've seen from the past 6 months. But how are you placed on the stock? Because recently also RailTel has received 2 work orders. But what is the near-term hold?
All the positives are already discounted in the counter. March 2023 lows were 95, and June 2024 high was 600. And from there, the counter is down. It's almost half, right? And now it's just sideways. There is no selling volume, but there is no interest also on the chart. See, there is nothing exciting on the chart because investor has already invested the higher level and now he's stuck. I would say let's not average out, but stay invested, because if there is a selling volume, I would suggest an exit. There is no selling volume also on the chart. What's the trigger point to turn the counter to make it to positive? Honestly, there is no trigger point as of now because it's still declining mode itself. Stay invested, keep asking the query probably after 15, 20 days and regularly on the same channel. Probably you will get a better clarity. Once the counter enters the sideways consolidation, someone will be able to advise. But for now, stay invested. I think 325 is the ballpark figure to watch out for now as the point above which it might turn positive. But for now, just stay invested.
Okay, 300 levels that we need to watch out for RailTel. Well, we have another viewer query, that is your TCS. He's asking on a 1-year time horizon. The company also appointed Sudeep Kunumal as the Chief Human Resource Officers, which will be effective from March 14 onwards, and he will be replacing Milind Lakkad, who is stepping down upon his superannuation. Kunal, how do you see TCS as an individual counter? Because you did mention that you're bullish on Wipro and Infosys, but what is your view on TCS?
It's a clear thumbs up if someone wants to stay invested for next 1.5 year. These counters are available at 10 years old trendline support. I would rather say 15 years old trendline support. The support on the TCS is placed near 3,500 or say 3,300. This is the level to invest and stay invested. I am sure the downside on this counter is very limited. Upside will take time. It might just enter into sideways consolidation and then eventually enters the upside. But otherwise, this is a good level to accumulate. On the entire IT pack, I'm very bullish. TCS can also be shortlisted as the buying candidate.
Okay, all right. A good, good view coming on the IT pack. But let's move on to another viewer query. That is, your Alex is asking the views on Blue Dart for more than 2 years on current levels. Well, the stock is reacting well today, Kunal, given that Delhi Metro Rail Corporation also signed an MOU with the company to provide urban logistics. But from a 2 years time horizon, how do you expect the stock to go? Any target levels that you want to underline?
Last 4 years, this counter has not done anything. The support is 5,500, which is tested almost 5 times in 5 years. And on the upside, this counter is not decisively closing above 8,500. So it's a very clear short-term trading strategy, which I'm suggesting here. 5,750, I think good level to initiate by. If the counter gives a closing below 5,500 on the weekly closing basis, take an exit. Upside, two profit booking zones, 7,500 and 8,500. In last 4 years, this counter has given these trades almost 5 times. Good trade, but don't just stay invested because of some positive updates. Let the market discount it. We will reinitiate buy at the higher levels above 8,500 if at all it triggers well. But otherwise, this is a good level to invest with the stop of 5,500.
All right, 5,500 that we can initiate for a stop loss on Blue Dart. But let's move on to another viewer query. That is, Swaraj is asking the view on Tata Steel. Tata Steel fairly resilient past 1 month, Kunal. How do you expect the near-term hold? Because even JP Morgan has stated that it can, this year itself, reclaim its 52-week high levels.
So, again, I'll just compare this chart formation with IT stocks. IT like TCS 3,500, extreme low levels. Similar was the case with Tata Steel near 125, 130 levels. Now it's trading at 150. The trend is absolutely positive. Immediate resistance is 150 itself. Closing above 150 can show us the levels of 165. So yes, short-term positive, mid-term positive, long-term trend is absolutely intact. So if someone wants to strategize, one can definitely. But for now, let's wait for the closing above 150 zone to initiate the buy with the stop of 145. But if someone wants to go positional, I think risk reward ratio is something which is very important. Focus on IT for now.
Okay, okay. Well, let's move on to another viewer query. That is Kanchan Biswas is asking on the view on RVNL, and she's asking whether or not she can buy at this current level. Well, from 6 months perspective, over 30% downside we have seen on the counter, Kunal. But you did mention that RailTel has already priced in a lot of positives. Do you believe the same for RVNL, because the counter has been having back-to-back orders too?
Absolutely, that's already been discounted, and that was the only reason these counters delivered crazy returns in last 3 years, right? But as of now, there is no momentum. And look at the last 5 6 months data from August or September 2024 so far. This counter is just in downtrend itself, and there are no buying as well as selling volumes also. So avoid such counters for now. If someone is already stuck, let's hold on for now. But fresh entry should be into those counters where the risk reward ratio is favorable. Number one. Number two is, for short term, there has to be some strength. There is no strength on RVNL as of now. So I'll clearly avoid this counter for now. We will keep a watch on it, but we will not initiate the buy just because the counter is down by 50%. So avoid for now. We'll see again probably after a month or so.
All right, avoid at this point of time for RVNL. Well, we have another viewer query popping up. That is, your Kishore is asking the view on Polycab and Havells. Kunal, how do you see both of these counters? Because recently also wires and cable counters were under focus given the Ultratech Cement's foray. How do you expect both of these counters to fare in the near term?
Polycab very bullish. The reason number one is the first decline which we saw was a severe decline during the end of February. In this 1 week, the counter actually came down from 5,800 to as low as 4,700. There was almost 18% decline on the expiry day itself. Now, after that, this counter has been into sideways consolidation and near to the support level. Trigger is placed at 5,150 to be on a safer side, 5,175. Above that, it's a clear buy with the stop of 5,000 levels, and the targets can be 5,900 levels. So that's a short-term view on the Polycab. When it comes to Havells, again, sideways consolidation, negative trend, but I will not be keen to initiate buy because there is no trigger point available on the chart. So avoid Havells for now. Focus on Polycab.
Okay, buy for Polycab, but avoid Havells at this point of time. Kunal, just one last question before we let you go. What are your top picks at this hour? We're seeing a bit of recovery, but then we're sliding into the red too. But any good opportunities that you're viewing in the markets?
See, I've shortlisted two counters, and honestly, we have created positions also, but I'm sharing with the logic. That's first is Chennai Petroleum. This counter has shown extreme volumes. This counter is down by around 50% from the high levels, right now trading near 570 levels. The crazy volumes were seen, and the overall trend remains positive. As I mentioned about the IT stocks, this is also one of the counters which has bounced right from the support level of 500. So yeah, I think this can be a good short term as well as long term trend. Stop loss is 550 for now, and the target can be 625. That's Chennai Petroleum. And the second is Avas Financials. Extremely long term trend is positive, mid term trend is sideways and showing good momentum since last 4 to 5 days. Well placed for short term as well as mid term trend. I think today also it's up by around 1%. So with the stop of around 1800, one can initiate a buy, and the targets can be 2100. And both the counters can be traded even for long term. So rather than booking the profits, I would say keep trailing the stop loss so that you can really make good if the markets are supportive and these counters outperform from them.
Okay, Chennai Petroleum and Avas Finances, good picks coming in. But thank you so much with that, Kunal, and we hope that we connect with you soon.
My pleasure, ma'am. Thank you so much.
Thank you. All right, let's take a quick check of the markets before we move on to the next guest of the show. Well, Sensex has built on well good to the gains, up about 500 points at this point of time. Nifty is also well above that 22,550 mark. So yes, so we have hit that and we have reclaimed that 22,500 mark at this point of time and up about 150 points. If you look at all of the sectoral indices are swimming in the green except the realty index, which is seeing a cut of about 0.6%. Otherwise, we can see good gains coming in from the auto index, energy index also doing well, Nifty metal index once again doing well, and Nifty pharma index, well, that is the top sectoral performer at this hour at this point of time. If you look at the small caps and mid caps, well, both of them holding well, especially for the mid caps, which is showing a gain of about over 1% at this point of time. So yes, a good set of gains that is coming in. IndusInd Bank, after last week's 28% knock, it is one of the top gainers at this point of time. 4.5% gain coming in for IndusInd Bank at this point of time, given that the RBI also reassured depositors of its financial health that it is stable at this point of time. So yes, good recovery that is coming in for the markets, that is your much awaited. But let's move on to the next guest of the show. Joining me is the Raj Vyas of Teji Mandi. Raj, good morning. Let me start that, while Nifty's valuation is way below its 5-year average, pointing to some bottom of this correction, we have the fears of reciprocal tariffs coming in from April. So how do you expect both of these narratives to play out for investors?
Right. Good morning and thanks for having me on your show. So, one should not be too worried as these are just the cycles. And we have seen in the past as well that after 4 5 years, market tends to correct and again it bounces back. And there are many positive factors that markets are ignoring currently. But as and when it starts to accumulate those news, and then markets are tend to rally upside. And if you see last week when we had seen global volatility based on this US coming into recession, stagflation, slowing growth economy. And when you see the markets, when we see the like gift nifty so it was indicating downtick for the Indian markets. The market started in the red territory, but as and when we close the session, the markets tend to hold on in the green. So that tells you that the internals of the markets are quite healthy. It's just that the markets are ignoring some of the key important parameters. If you see both the monetary and fiscal policy, we have seen the RBI cutting the interest rate almost after 5 years. That is ignored by the markets. If you see the RBI, they have injected liquidity worth 6 lakh crore in the markets. They have relaxed their risk-weighted ratios. All these factors are currently ignored by the markets, but we see this as a positive sign for the overall macroeconomic perspective. If you see regarding the tariff, while there is uncertainty due to geopolitical issues, we believe that India could be a major beneficiary because with the US-China relationship under issue, and we don't think that their relationship will improve going ahead as well. So India could see an increase in business, particularly sectors like defense, energy, and pharmaceuticals. So India's strong position in generic drug manufacturing could also help mitigate any potential tariff impacts on that sector. Because if you see on the pharma as a whole, 60% of the this generic medicines are exported to the US markets. And if the tariffs are increased, then surely the companies will not export there much, and that will increase the prices as well. And I don't think that the US government will play with the healthcare as a segment. So I don't think there will be any issue. It's like we have to wait for 2nd of April how things pans out. But at the moment, I don't think there will be any major issue with respect to India as a whole compared to other countries like China, this Canada and other countries. But on the contrary, we believe India is best placed currently.
Okay. Raj, you mentioned that some of the beneficiaries like defense and pharma could be from the tariff uncertainty that is going on. But how do you expect investors to approach the IT stocks? Because that has seen a significant
Yeah,
underperformance in the past couple of months. And given
yeah,
that reciprocal tariffs, it could hinder some of the consumers' confidence too. How do you expect the investors to
right.
approach the IT space?
So, IT, we remain positive only. There is no issue because, as in our previous calls as well, we highlighted that post the US economic elections, the IT sector generally tends to beat the other benchmark indices, and 7 out of the 8 times they have given positive returns. So we hold on to those parameters on a fundamental basis. And if we see, like, because of this recession and slowing growth economy, the IT sector was impacted last week, and it was down 3-4%. That impacted both large and mid cap companies. But we will wait for the this FOMC this meeting due this week. We will see how they take stance with respect to the economy, the inflation, and the growth projections going ahead, as well as the inflation numbers. So if you see in the December, they highlighted that they will keep two rate cuts for 2025. So we will keep that trajectory as well, how the Fed governor takes all this thing into effect. And then only we will have a fresh like a call on the sector, whether we there is some negativity around and that could impact the potential this movement ahead or not.
Okay. Okay. Raj, what about, let's talk about the
Mm.
interest rates, how it is expected in India to pan out. Because on one hand, we have the cooling inflation that supports the case for more rate cuts. But
Right.
the US Fed could meet this week and they might hold the rates again this time. So, how do you
Right.
expect the RBI to approach in the April MPC meeting?
So for the US, like as we mentioned,
Mm.
the rate levels are expected to remain unchanged around 4.25 to 4.50 as earlier. But we will closely monitor the projections as mentioned with respect to the inflation, unemployment, and the path of rate cuts ahead as well, because that will pave way for other countries as well. But coming back to a question with respect to India, like if you see the inflation has cooled off to 7 month low, the IIP numbers have expanded. The GST rate, the numbers that you see that are increasing. We have lately seen the auto numbers as well reporting positive numbers. So all in all, the internals, as mentioned in my opening this statement as well, the internals over here are quite strong. It's just that the markets are ignoring these factors. And with the kind of inflation cooling down and the numbers pretty much healthy, we believe that that the RBI in its April meeting will surely cut interest rates, because that is something they have been talking about. That the inflation numbers we have to track, and if the inflation numbers are below their levels, they will see more rate cuts. And we have seen the inflation currently, it is below the RBI's 4% band as well. So that is pretty much healthy. So the consensus estimates right now are that the RBI will cut another 25 basis points interest this rate cut in its April meeting, and that
Okay.
should be healthy for the economy.
Okay. But Raj, there are some, the news that there could be inflation in US because if US goes ahead with the tariffs, other countries would also, impose tariffs on US too. So there is a fear
Yeah.
of rising inflation in US. How would that spill over to other countries too? Because on one hand, you're saying that, RBI might rate cuts, but would that be sustainable in the longer term horizon?
So yeah, like as mentioned, the internals of our economy is strong, and we don't think that the kind of if you see the tariffs placed on other countries, be it Canada, be it China, or be it other European countries, I don't think that kind of harsh impact is visible currently on India. If you see post our Prime Minister meeting the President of US, Donald Trump, we have seen Tesla also coming into our country. They have also posted job recruitments as well. They have also tied up with Jio and Bharti Airtel as well in terms of this your network connections, Starlink. So because they want business from India, and currently, if you see based on that parameters, India remains like good bet because the labor is cheap over here, the demand for all the products and services is very much high. So all in all, we don't think that the reciprocal in tariffs or the higher tariff rate will impact India as a whole. And in the past as well, we have seen the relationship of President Donald Trump with Modi was quite healthy. And we continue to believe that the relationship is healthy and that shouldn't be much concern. And going ahead as well, we believe that this partnership will further lead to India progressing well, and it can be a potential beneficiary of the geopolitical tensions or the tariffs that we are currently seeing across global markets.
Okay, Raj, just one last question before we let you go. We have the Q4 earnings season that would begin soon, but any pockets of
Yeah.
value that investors should watch out for?
Value, like, see, if you like Q3 as well, if you see many were fearing that the Q3 season will not be that much good, but on the contrary, the results were pretty much healthy, and both on the top line as well as bottom line numbers. And Q4 as well, when we talk to the dealers or or the industrial players as well, the feedback that we are getting is that with the liquidity easing, there is a sense that the growth is picking up pace, and that should help the companies reporting their Q4 earnings as well. So we believe that the Q4 will also be good, and the coming 2 quarters, that is Q1 and Q2 of FY26, will also be positive. Why? Because last year, if you see, both Q1 and Q2 were soft because of your heat wave and the general elections. So because of that and the low base effect, the this quarter's earnings will be quite healthy, and we believe that it will be sounding like negative, but the thing is that the kind of rally that we have seen in the last 4 5 years, that every stock that you have picked that has given you healthy returns, that is not going to be now. It is that the companies that will be reporting good set of earnings, that will surely lead the race, and that will give healthy returns. So it will be a stock pickers market right now, and that will be pretty much good because not each and every stock will perform, but selectively the companies that will report healthy earnings growth will tend to outperform the benchmark indices, and that should surely generate alpha for the investors.
That's right. A stock pickers market, that's what we have a key takeaway.
Yeah.
But with that, we have to let you go, Raj. Thank you so much for your time, and we hope that we connect with you soon.
Thanks.
All right, let's take a quick check of the markets at this point of time. Well, Sensex is up about 450 points. Nifty is also above that 22,500 mark. So yes, a good set of gains and recovery coming in for the markets. All the sectoral indices are doing well, except from the Nifty IT index, which is seeing a bit of a knock in, as well as Nifty Realty index, more than 0.5% cut coming in. However, the good support is coming in from the mid cap and small cap indices, which saw a sharp knock last session. Today, it's holding well, seeing a good recovery, about nearly 1% gains coming in. But with that, we've come to an end of this edition of the opening bell. Don't forget to tune in at 3:30 for closing bell. We will be discussing about how the market is developed, what the stocks were in focus. Until then, signing off.